Okay, welcome to my New York AM day trading model. I've been wanting to make this video for a while, finally getting around to it. Gonna be locking in on the YouTube a little bit, probably do like a video a week for now. Anyways, first thing I want to talk about, I only trade for 90 minutes a day. I only trade New York AM session. Why? Because I want to. You don't need to trade multiple sessions. One session, you can make as much money from day trading as you want in one session. I promise you. Okay, you can trade as much as you want. I do better when I'm focused, I'm locked in for an hour and a half, 90 minutes, usually less, every single day. I don't like trading Asia. I'd rather be out doing anything else or working on something else, literally anything else. London, middle of the night for me, don't like it. PM session, again, don't care, rather be doing anything else. I only trade New York AM. If you trade other sessions, that's fine. I just don't see the point in it, personally. So that's where I'm at. Why do we trade during New York AM session? I feel like this video is for people who already know why that is. All the volatility, all the orders come in at 9:30 a.m. EST. I mean, it's that simple. That's why we do it. That's when New York takes over the stock exchange. That's when all the orders are being filled from New York. That's really all I have to say about it. Okay, today we're going to be talking about my model and partially my discretion. Why I trade the way that I trade. So first thing, coming onto the charts, we're looking to find our higher time frame, drawn liquidity, bias, whatever you want to call it, I don't care. Higher time frame is the 4 hour and the 1 hour. Higher time frame always holds more power. Drill that into your head. Just drill it, okay? Higher time frame will always hold more power. So first thing we're going to look at is the 4 hour, then we look at the 1 hour. Next, lower time frame retrace. I use the 15-minute and the 5-minute for my setup. Again, same thing, we're going to go over that. And then my entry, I use the 3-minute through the 30-second. Generally, I take the highest time frame inverse fair value gap of the manipulation leg. I'll show you guys later on. And then target, stop loss, we'll talk about that too. So that's what we're going to get into today. Let's do it right now. Let's get into it. So first thing, higher time frame, drawn liquidity, and bias. I'm not on the charts. First thing, okay, I already forgot to put trend. But first thing we're looking at, are we in an uptrend or are we in a downtrend? Okay, we're in a downtrend here. As soon as we close above this high, we're in an uptrend. Okay, close here. We're in an uptrend. I'm thinking longs. Next, I'm looking for a higher time frame, IFVG or FVG. So as you can see, I have my fair value gap marked out right here. I'll write it so you guys can remember. I have my fair, oh, that looks so stupid. All right, I'm taking it out. I have my fair value gap here. Okay, oh, don't want to show that. Get a nice healthy retrace into this fair value gap. What do we think we're going to do? Probably long off of it. If we inverse it, that's another story. I'm not sure. Here I put a liquidity sweep. Again, we're in an uptrend. Bang, bang. Sweep out that liquidity. If we get some kind of confirmation entry in here, then we can long that. Same thing. And then also we're looking for S&T divergence with ES. If ES sweeps out this low and NQ doesn't, that's even more confluence to long. All of this stuff needs to be used together. I want to write that down. Oh shit. Okay, there we go. Together. All of these are used together to determine our high time frame, drawn liquidity / bias. Okay, now once we have our higher time frame, drawn liquidity / bias, here we're cleared an uptrend, we think we're going long. Then we can look for our lower, damn, I was not good at this. Look for our, shit, okay. All right. Okay, I'm dialed down. Then we can look for our low top. If you're at this part in the video, just give me a break, man. Just give me a break. Then we can look for our low time frame retracement. Okay, we're already looking longs. We're moving upwards, right? We got the liquidity sweep here. We're going up. We're looking for a retrace into a 5 or 15 minute fair value gap. That's what this is. 5/15. I know it's gonna look like shit, but anyways, okay, yep, looks dumb. Getting rid of it. Okay, retracing the 5 15 minute fair value gap. Again, same thing. If we close here, we might go short. If we close here, we might go long. That's pretty simple. Equilibrium is another thing I want to talk about. I don't generally use equilibrium on the higher time frame. I don't care as much. I'll look for it. It's just, again, it's just added confluence, added confirmation. Same thing we're looking for in the lower time frame is the same exact thing we're looking for in the higher time frame. I prioritize FVGs and IFVGs more on the lower time frame. I don't look for liquidity sweeps as much. Why? For me, for my model and the way that I think, I like to see a retracement. I like to take continuation trades. It's just more. Like, it's more telling me that we're going to go in this direction. If you're looking for, okay, this liquidity sweep here, right? Sweeps out liquidity, we get confirmation here. It's just not enough for me to feel comfortable taking this long. Yeah, we're going to get higher RR, right? Get a 4 RR on that. Then if we're taking this long with the same target, that's a 1-to-1 right there, right? But this is going to hit a lot more. I like a higher win rate. I have about a 75% win rate. I like a higher win rate. I like to see trades win. I like to see the ball go through the hoop. I mean, it makes me feel more comfortable. There's people that trade high RR, low win rate. I don't get it. That messes with my brain. I don't understand it. I want to see trades win. Simple as that. So I don't like to take reversals. I like continuations. That's enough for a while. Okay, equilibrium. We're looking, equilibrium is basically the 50% of the range here. As you can see, of this range here, as you can see, price perfectly taps right below equilibrium. That's another sign. Equilibrium is a healthy retracement. That's what we like to see. Okay, that's, again, we're not taking a trade based off of equilibrium. That is added confirmation. Okay, so we get equilibrium, we get the FVG, we get the IFVG. Now let's say we have an SMT. Say, here's NQ, say ES doesn't even tap into the gap at all. That would be an SMT, okay? Or say ES doesn't sweep out this low. That's an SMT. That's more confirmation that we're going to the upside. If NQ and ES don't agree, one of them's lying. It's simple as that. So if they're both headed down, one of them sweeps out, then we're looking long. Okay, same thing here. So we got, right here, we got bang, we got FVG, we got equilibrium, we got a higher, low time frame SMT. We just saw our higher time frame. We're in an uptrend. This is all looking longs. This is beautiful. We got the higher time frame bias. We got the higher time frame draw on liquidity. We got the setup. Now we look for the entry, right? Yeah, I did not space these out. Okay. Get out of my face. We're just going to pretend that you can't see that. Okay. Now we're looking for our IFVG entry. It's simple. We look for one thing for entry, IFVG. Okay. I use the 3-minute through the 30-second, and I generally take the highest time frame inversion of the manipulation leg. What is the manipulation leg? Right here. Right here. This is the manipulation leg, okay? So say this is a 3-minute gap, right? And then say we have a 30-second gap lower, Okay, the 30-second closes, right? Okay, all right, let's just, I'm gonna redraw that. 30-second closes right here, inside this 3-minute gap, okay? We still don't know what's gonna happen. We got the 30-second inversion. That's our entry model. Long, 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 right? We got the this could very easily tap into this 3-minute gap and then run the opposite direction. Higher time frame holds more power. I said it at the beginning of the video. I said to drill it into your head. Drill it, drill it, drill it. Higher time frame holds more power. I take the highest time frame inversion. Again, I'm someone that likes to see the ball go in the hoop. You're going to get lower RR. Same thing. You would get higher RR if you take the 30-second, the lower 30-second, than if you take the higher 3-minute, right? I'll visualize that for you. Okay, chill. 1.45. If you take the 3-minute, you would have got like a 2.7. You take the 30-second. The 3-minute is going to win so much more often. And again, that's how I trade. That's my discretion. I like to see the trades win. I just said that a million times already, but I'm trying to get the point across. You're going to win more. Simple as that. You're not going to make as much money, but you're going to win more. So that's how I trade. And then, all right, let's get rid of this. Say we close at this dot. Then we're looking at long. Okay. Now, we're going to talk about targets and stop losses. I should have thought about this more. All right, let's move these over. Okay. Targets. What am I looking? Nope. Bang. All right. Say we have bullshit over here. We have a peak here. And then this is where this came from. Okay. Right. Let's say one of these. Oh shit! I shouldn't have done that. All right, guys, scratch this from your memory. I'm redoing it. This bullshit, massive peak here, and then that's where it comes from. Okay, this is for aesthetics. All right, for me, I like to target the next possible point of reversal. That's the lingo, that's the vernacular that I use. Add vernacular to your vocab. It's a good vocab word. Vernacular. Okay, next possible point of reversal. If we have no type of gap in here, no significant high, none of that, then I'm taking the next one. The next possible gap or significant high, that's reasonable. Okay, so if we have a little high, if we have a high here, right? Oh shit. Okay, ignore this. Actually, I'll put it right here. Okay, so if you have a high here, right, we're not going to target the 265. I guess it's a normal target. For this example, 265 is not a lot of points. We're not targeting that. Okay. So what we would do there, that would be our break-even point. Break-even. That would be our break-even. This would be our TP. I generally don't leave runners. What I've been doing recently, I've been trailing my stops. So as we get closer to TP1, as we're about to hit it, instead of having a hard TP here, I'll trail my stop like here, and I'm just going to try to get more out of it. I don't always do that, but I have been recently. It's been working out pretty well. I've been able to get more out of my trades. I would recommend giving it a shot. Okay, so again, that's how we get our break even. That's how we get our TP. The next possible point of reversal, that's reasonable. For a stop loss, let's say this was all the way down here, okay? And we don't get this IFVG till up here, right? We're not gonna have a 1,000 point stop loss. We're not doing 0.5 RR, all right? We're not doing that. What I'll do here, I'll set my stop below the IFVG that I entered on. a lot of people wouldn't agree with that. Technically, it's not protected by anything. Technically, we could definitely, give me the brush. We could come back here, put in a wick here, and then continue higher. So I could be right about the trade idea and still get stopped out because of that stop loss placement, but I'm not doing a 0.5R. Generally, it's not common. It's not common enough to where I'm comfortable doing this. We could see a retracement into the gap, generally like 50% of the gap. I think it's called consequent encroachment, maybe. Or that's something completely different. I genuinely don't know what consequent encroachment is. That's another thing. If you don't use a certain PD array, you don't need to know what it is. You don't need to know every single PD array. I have this strategy that works for me. I have a 75% win rate with this strategy. It works. I'm happy with it. I don't care about any PD array that's not a part of my strategy. Don't care. Couldn't care less. Now, there's a case for adding it, but I'm not fully against adding to your strategy. More confirmation is more better. W English. But you don't have to. I literally could not care less what consequent encroachment is. Anyways, that was just a tangent. But yeah, it's just not that common. If we inverse an IFVG, we expect a lot of momentum in the same direction. We don't expect to come back down. We don't want that anyways. We want the momentum to continue in that direction. That's why I feel comfortable with my stop below the IFVG that I took the trade on. So there's my entry. That was everything I had there, I think. Look at this mess that I made. Make it all tight. Okay. We went over. This is so ugly. I'm not editing this at all either, by the way. This is raw footage you guys are seeing. Zero editing going into this. Why? Because I don't know how to edit. Genuinely have no idea how to edit YouTube videos. If anyone knows, comment down below. I don't know. So I'm not doing it. But here we go. We went over our high time frame draw liquidity / bias. We went over our low time frame retracement. We went over our entry model. We went over our target. We went over our stop loss. What else do we need? Let's show you guys an example. Okay, this is going to be testing me because I genuinely don't have a trade picked out. We're actually just going to have to find one. Okay, here's our AM session. Here's our AM session right here. What is this? Wednesday, June 26th. Wednesday, June 26th, 10 o'clock. Okay, right here. And again, guys, I don't pay for Sweaty Trading View because I trade on Top Step. So I understand it's like $16 a month, but like, I'm not going to use it. Maybe I will if I keep making these types of videos because I probably will want replay mode. So I low-key probably will have to get it, but I wanted to make this video right now. Didn't want to wait any longer, so I'm not. Okay, anyways, let me stop rambling. We have a 4-hour bearish FVG. It's fucking massive. Okay. And again, this and on doesn't exist at this point. So we have this 4-hour here that we just tapped into. Oh wait, no, we didn't tap into it yet. Alright, I'm lying. We didn't tap into it yet. This is us right here. So as you can see, we're trending towards it. That's really good. We like that. We think, hey, we're going to tap into this 4-hour, and then we're going to short. Okay, now we're going to look at our 1-hour. Oh, would you look at this? It's a 1-hour bearish gap that we just inversed to the upside at 9 o'clock. Now we're definitely thinking, okay, this is a great target, this 4-hour gap. We got long set up here. We have this high time frame IFVG. Let's see. We're in an uptrend on the hourly. Let's look at the 4-hour. We're still in a downtrend on the 4-hour, but we're in an uptrend on the hourly. Just flipped. So, okay. All right, it's getting a little harder to see now. Yeah, right here. All right, we're an uptrend of the hourly. 15-minute. Didn't quite inverse that yet. But we have this 15-minute here. 15-minute bullish. Oh, I actually remember this trade. Okay, I'll be able to mark this out well then, because I remember it. Okay. 15-minute bullish gap. We're currently trading inside of this hourly bearish. Yep. Okay, we're currently trading inside the hourly bearish. Fuck, dude. 15-minute bullish. Okay, bang. On market open, we tap into this 15-minute bullish gap. So our higher time frame, we're bullish. That's what we decided, right? Now we're looking for a low time frame retracement. Bang, we get it right there. Tap into that 15-minute gap. Okay, now we're going to scale down to 5-minute. This is actually so poor. Yeah, I'm going to get replay mode for you guys for future videos. This is actually the poorest fucking thing ever. Okay. Oh, this is Wednesday. I think this was CPI. I didn't even realize that. Yeah, I think CPI was on Wednesday. Or was it Thursday? Yeah, CPI was Wednesday, PPI was Thursday. So this was the CPI trade. Oh, so CPI's... Yeah, okay, so this is CPI high right here. I do remember this trade. This trade was awesome. Okay. Stop. So we get the 15-minute, we get the 5-minute retracement. We're like, whoo. Now we're looking for... God damn it. Now we're looking for longs. Sorry, I'm such a fucking piece of shit. Tapping on the 3-minute. Where's our inversion? I think it was a 30-second. I don't want to skip these though. But yeah, I don't have the 2-minute on here because I trade on Top Step. Guys, this is genuinely the brokest thing. I'm really sorry. I didn't realize how bad this was going to be. I'm still going to show you it though. I'm going to finish this trade recap here. Was it a 1-minute inversion? Okay. Oh, yes, it was. Okay, here it is. So here we go. Here's the IFVG. I'm going to get rid of some of this stuff. Here's the IFVG. Super tiny. Wait. I don't have the 30-second. It was a 30-second. God damn it. Alright. This video is not turning out how I thought it was going to, with me being too fucking cheap to pay for replay. I didn't realize how bad this was going to be right now. But you guys are going to have to imagine that there's a 30-second right here. You're just going to have to imagine it. Okay, so we get the long setup. Stops below the 30-second. Targeting the data high. Data wicks are the strongest draw on liquidity. If not the strongest, they're at least top 3. Always, 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 when we get CPI news data, PPI news data, FOMC, don't trade FOMC. PPI, CPI, always target the data wick. It's gonna have it has like a 90% win rate. I actually don't know the exact number, but it's pretty fucking high. So yeah, this banged 1.9R. Break even at this high. Now, this was a reasonable pointer, or this was a reasonable target, 1.2R. I would have been happy with that. However, data wick. We're going to the data wick, guarantee it. So we take the data wick, we take break even here. That's a banger right there. There's an example of it in action. That's how the strategy works. Okay. I'm gonna get out of here right now. There we go. All right. That's my New York AM day trading strategy. I gave you, first thing we do, we get on the charts, we find our higher time frame, draw on liquidity / daily bias. Then we scale down to the 5 and the 15 minute for our lower time frame retracement. Then entry, showed you our target, stop loss. That's it. I don't sell anything. I don't plan on selling anything soon. Eventually, I do plan on starting a mentorship. If that's something you're interested in, comment down below or shoot me a DM. But yeah, I wanted to put this on here, completely free. This is the sauce. Take with it, do with it what you will. Let's get it. Stay hard.